There's been up and down volatility in the major currency pairs to start the Asian and European sessions. As we head into the New York session, I'll take a look at the technicals that are driving the three major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. Looking at the euro versus US dollar in the hourly chart and trading yesterday, the market euro versus US dollar fell. That took the price back below the 100-hour moving average in the New York session, and the price stayed below that level. We did come back down toward the 50% retracement here at 1.13183, but found early buyers against that. In the early Asian session, the market moved back to the upside. And where do we stop? We stopped right at that 100-hour moving average at 1.13435. Sellers leaned against that level. Why? Risk could be defined and limited against the level. The market pushed lower. And where do we go? We went right down to the 200-hour moving average. That's a green line in this chart. And what did buyers do? They bought against the level. Why? Risk can be defined and limited against that level. And the price back up. We've since moved back up toward the 100-hour moving average, found early sellers, and we're starting the U.S. session right near the 50% midpoint of the move down from the high price that we saw in the month of April to the low price that we saw in the month of May. That 50% retracement level comes in at 1.13183. That's this level right here, and we'll see what happens in between those two. Or what happens at that level. So we have resistance at the 100, support at the 200, and 50% retracement as sort of a pivot point for the euro versus US dollar traders today. Those traders who sold against the 100, bought against the 200, sold against the 100 are doing pretty well. Those who trade in between, doing okay because the market's up and down. Let's take a look at the dollar versus yen next. And if we look at this currency pair, we see something kind of similar. In that the moving averages did their job. The market yesterday moved above the 200-hour moving average. That's a green line in this chart in the New York session, just like the market moved in the against the euro. In Asian session, we did move below that 200-hour moving average, but we held support against the 200-bar moving average on the 4-hour chart. There's a whole cluster of moving averages right through here. As you can see, the move back to the upside took the price right up to the 100-bar moving average on the 4-hour chart. Not once, not twice, but three separate times. The market sold off, sold off, sold off. The last move, finally, third was a charm. Took the price back down to the 200-hour moving average, where we've so far found support at 143.989. The price, like the euro versus US dollar, has a 50% retracement of the move up from the April low to the May high. That is also in the way, or in play, I should say. And that level comes at 144.25, and it will be the pivot point between the two moving averages up here and down here. Pivot to 50% midpoint as a pivot in between. So sellers against the 100-bar moving average, the 4-hour chart did okay. Buyers against the 200-hour moving average here were stopped out, but then if they got back in, they would have been okay. That the 100-hour moving average is now holding support. We'll see if that can continue in trading here in the U.S. session. Finally, let's take a look at the sterling versus U.S. dollar. And this currency pair didn't break below the moving average in trading yesterday, but it did come down to test the 100-hour moving average right through here. Right at the end of the U.S. session, beginning of the Asian session, we did see a bounce back to the upside. That bounce back to the upside came right to the underside of this broken trend line right through here, where we had a number of different swing lows forming this trend line. We broke below it in trading yesterday and then held it here. We held it right here. Sellers pushed the price out back to the downside. And where do we go? We came right down to 38.2% retracement. We did break below this high and this low right here through here. But the 38.2% retracement of this move to the upside did hold support. That level held at the 1.34614 and increases the level's importance now going forward. That bounce back to the upside did get back above the 100-hour moving average, blue line in this chart. And moved up to this level at 135.14. Now, the significance of that level, I have to go all the way back to the weekly chart of the sterling versus US dollar. And if you take a look at the different swing levels going back to, I think, 2018, 2018, through here, we had a number of different swing lows and swing highs that came within this area. This is the 14 level right through there. So this was sort of the ceiling here for this pair. Maybe it was a little bit higher, but the price then you moved above it, tried to stay above it, couldn't do it. And then we saw this volatility up and down around the levels with the moving average holding support initially, and then them giving way right through here, pushing the price to the downside. So it wasn't until last week that the price, or last year, I should say, that the price came back up to this level. This is a weekly chart, folks, so this is years right through here. Came up to that area, found willing sellers, pushed all the way down to the low price early in January, and then moved back up and retraced the entire move to the downside from the 2024 high to the 2024 low, then we moved above it. That was bullish, but now we're trying to get back below that 135.14 level. And hence the significance of that level. It's a long story, but I think an important story to understand this 135.14 level right through here. We moved above it here, failed, moved above it here, and failed. So the sellers are trying to make a play here in the sterling versus US dollar. We'll see if they can keep that momentum going. Stay below the 100, stay below the 14 level, keeps the sellers more in control in the short term. With the 38.2% retracement, the next key target to get to and through on the downside, then we'll look for the 100 or 200 hour moving average. That's a green line in this chart. So there you have it. A look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye bye now.